Hi, and welcome to the Ask a Private Lender podcast. I'm Lawrence from Mortgage Automator, joined by my partner, Joseph Fuchs. And today we have Randy Forbes from 460 MIC out in Nanaimo, BC, actually, to be exact. First of all, Randy, thank you for stopping by today. We really appreciate it.
Thanks for having me.
Yeah, thanks for joining us, Randy.
So for those of you who are unfamiliar with Randy, a couple of key points to know. The guy's been in the business for a really long time. He's been working with MICs, I think, for the last 20 years. 460 started about 7 years ago. And just to have an understanding of their growth, they've been doubling pretty much every single year since it started. So number one, congratulations for that. That's an extraordinary feat. But I think it just goes to show that private mortgages they're here to stay, and it's only growing year after year after year. And, it's commonplace in the market today, right? Maybe not so much when you started out, and maybe you can get into that from when you started out. How did you get into the business? Because when you started 20 years ago, it wasn't a really, a common thing at that point, right?
Yeah, it's actually quite funny because I was a shareholder, general manager of a real estate operation we had called Coast Realty Group. We had, in the early days, we had like 30 salespeople, but as time went by, we got up to 250 salespeople, and we had 12 offices along the coast of the island and the mainland. And it used to drive me nuts as the broker general manager of the real estate company, how many realtors had a lot of success in their business and at the end of the day had nothing to show for it. So I knew a guy over in the mainland that I worked with who had this MIC. And I said, well, what's that about? So he told me about it. So we started an internal MIC, and we called it CRG, Coast Realty Group MIC. And it was for our salespeople and employees. And that was back in the old Northwest exemption days. So you could have as many as 50 people in your MIC without doing all the audited statements and a lot of the stuff you have to do today. And it was a recruitment and a retention tool. No interest in growing it to be big company. It wasn't. It was a recruiting and retention tool for our salespeople. If you worked for us, you could invest in it. And if you left us and went to another job, whether you were a salesperson or a staff, you had to turn your shares in, and we would sell. We used to have it at the end of the day. We had a lottery every year, so one or two people would leave the company. We would put people's name who wanted to invest in it into a hat, and they would get picked out. Our average return back in the late 90s was about 10%. So it was a really good program.
Sure.
Funny enough is the more successful it became, we had no interest in growth. It was really about return for our salespeople. So we would limit how much people, some years we wouldn't even take any more money because we didn't want to find ourselves with more money in than we could put out again.
Of course.
At the end, as the company grew, the real estate company grew, it got to be a pain with the Northwest exemption with no more than 49 shareholders. People would put their name in the lottery for one or two spots, and we'd have like 40 or 50 people for one or two spots. And the salespeople, the top people often would call me and say, well, put my name. And I go, well, that's not how it works. It's a random draw. So it became actually near the end, as it got bigger and more popular, it actually became a pain because top salespeople go, well, you got to let me in or I'm going to leave or whatever. It was.
Oh my God.
So we did that for 1997. And then 2012, I decided to kind of retire. Right? So I resigned from my job. I was a shareholder of the company. And I ran the MIC for another year. And then I got hassled into starting a new company by a bunch of people. And we started 460. I resigned from running the CRG MIC, and we started what this is the 460 MIC is a public MIC, and it's meant for shareholders from anywhere. It's not an internal, and it's not a recruitment retention tool. Although many of our salespeople and staff have money in our MIC, but it's a public.
Gotcha.
Yeah.
And we were talking before we started recording here. 460, and you can explain it if you want, is the kilometers from end to end or all the way around, right, of the island?
No, it's from the tip of the island in the south to the tip of the island in the north. So the tip of Victoria and the tip up by Port Hardy. That's 460 kilometers of land.
I love it. I love when people have not hidden messages, but there's something to it, right?
That's a really cool. I like that a lot.
So if you've seen our logo, so I mean, there's our, you can see it, but that's our 460 MIC logo. It's green, and 460 Realty is a blue square, and 460 Communications is an orange square. So every time we start a new division in the 460 group, we just change the color of the square. So that branding across the company is kind of cool too.
I like it. So that's the 460 group of companies. Got it.
Yeah.
Very cool. So, I mean, you kind of got into it. You started in the real estate business. The mix started. It was a way to, I don't know about retain employees, but it was definitely something that they loved and they wanted to be a part of. You ended up turning it. You retired. You ended up starting 460. You guys have been growing rapidly year after year. What kind of deals does 460 do? Are you guys mainly BC, or are you all over Canada? What's your wheelhouse?
Right now, we're just in BC. We found lots of business in BC, and it's a little bit like I said in the early days of the Coast one. You don't want to take in more money than you can put out, and we have been non-aggressive about. We have no investment seminars. We're not out there trying to sell investments, so we don't go out and try and find investors. They come to us because they've heard about us.
It's like a word of mouth, essentially.
Yeah, and that's a good way to go. We have doubled every year, but by people that know us or know of us, or maybe through our salespeople. If they sell a house, they're looking for a place to invest. So all that's been real simple. We anticipate at some point going farther across Canada, but at this point we've got, I think our portfolio is about 17 million right now, and it's growing consistently, and we've always got all our money out. So as we get more money, we're going to look for more places, but right now we're just in BC.
Fantastic.
Yeah, I mean, I think, when I look at successful lending businesses, they kind of stay in the areas that they know. When you start branching out and you don't know the areas and you don't really know what's going on, that's when you can get into some trouble,
Yeah, no question. I was in the real estate broker. I was a managing broker partner for, since 75 in the real estate side. So I know realtors from all over the province. So we get, may or may not agree with it, but some appraisers aren't really as knowledgeable on values, and the appraisers sometimes just a little shaky. But we'll call up realtors in the area and say, can you take a drive by at this house or check out some local deals and give us an idea on whether this appraisal is the right thing? So we like that secondary comfort on most of our files. And you find a great deal of discrepancy. If you're looking for just to make money on a MIC and you just threw the appraisers on the pile and said, well, look good to the appraiser, you would, I think you're not doing, enough due diligence for files for investors. So we do that as well.
Completely agree. And, touching on what you're saying, when you are responsible for the money, right? When it's your business and you're bringing investors and the investors, sometimes it's friends, it's family, it's people you've created friendships with over the years. You got to do more than just look at a number on a piece of paper from a guy that has no, whether he's saying it's worth $1,800,000. I mean, that's a big difference to us in this business, but to him, irrelevant.
Right. Well, it makes a difference on the loan to value. Yeah.
And I think especially on an equity basis, which is where most privates tend to lend on, right? It's not serviceability, credit sometimes, dire situations come up, people need money quickly. You absolutely need to rely on that equity to make the right decision so that you don't get burned.
Absolutely. And the discrepancy, like you say, it may seem like it's a little bit to a appraiser, but to us, the loan to value, we like the 70% maximum loan to value rate right now. And that's kind of where we're hanging around. Well, if the appraisal was $100,000 more and you lent it based on that, your loan to value could be up in that 75, 80. And now you're into a little riskier portfolio than we like.
And you're not getting the return that you should at that
based on the risk.
That exposure as well.
Risk.
So it's one thing to go there as long as you're getting what you're supposed to get for that type of a deal, right? Do you find yourself getting deals because you have that real estate company? You have some of your agents coming to you saying, hey, I have a purchaser, maybe a deal fell through at the bank and we got to get the private funds so that they could solidify that deal and it doesn't fall apart?
Mostly what we do, we decided about 2 years ago that we won't do any business direct. We deal with brokers all the time. I get a number of people who ask me about direct lending. So if our realtors have somebody who wants a mortgage, we'll send them to a broker. Brokers deal with us, we deal with brokers. And I've had people call me directly. I had a call the other day and I say, look, here's the deal. My job is to get as much return for our investors as possible. And your plan for you borrowing the money is to get the best deal possible. And how can I serve you by you trying to get the lowest rate and me trying to get the highest rate? I said, so if you had a third party, this is a conversation that I had with, and I have my broker's license, but the difference between realtors and agency and brokers and agency is, the gap needs to be closed for brokers. A broker should be working for the borrower. Or if he's working for the lender, tell the borrower. So right. I like the idea where I say to the borrower, go to your broker, tell him that he's working for you and you want the best deal possible. And if he negotiates with me, he might get a better deal than I would give you if it was me just saying, here's what I'll do for you, right? So
I understand.
Well, it's interesting you say that. It's interesting you say that, Randy, because it's fair to say that in this industry, the business you are getting is relationship based. There are guys that are coming to you. They know who you are. They know how you work. They know they can count on you. If you say you're going to do something, you're going to do it. You're not going to let them down last minute. I think that's important. I think there should be a lot of emphasis on the broker having that relationship with you and then being able to bring their clients to lenders like yourself for those specific reasons.
And we tell the brokers that too. If we get a direct call, reasonably often, and I'll give them a list of brokers that deal with this and say, call any one of these guys or girls and have them put your application on our system with Mortgage Automator and on Philogix, and we get it done that way. And that stops me any conflict that would come up with the borrower and the broker and me.
It makes sense. I mean, I kind of like that view of it rather than dealing with them directly. And you have another person who's their sole job is to look after the borrower. That's their job. They're in charge of the borrower. You can deal with your business, your money, your investment. It separates it. It makes it clean. So I was going to say, Lori,
just to touch on that quickly, it eliminates the conflict of interest. That's what it is.
And there's no question that there's a conflict for a borrower to be lending directly without a third party helping the borrower decide.
Right.
Makes sense. Yeah.
My opinion, and it's only mine. So
you're in BC. You're lending in BC. What kind of deals? Is it residential, construction? How big are your loans typically? Like what's
First,
like
seconds?
What's like the deal that you mostly write, if you want to say it that way, so people have an idea of what to send you?
Well, it's across the board, really, and but so residential, construction, commercial, all three of those. First and second, both of those. You touched on it earlier. Equity is our main ingredient, and covenant is the second ingredient, and funds available is the third ingredient. So our loans will be anywhere across the board. We've got we have a certain percentage of our portfolio that we'll put in construction, single family. We've done a couple of small developments. But they're all over the place. The reason people need to use private lenders is amazing, actually. I was telling this the other day. I golfed on Saturday. I was telling a couple of guys I golf with. In the old days, a badge of honor, and I'm an old guy now, but the badge of honor was paying off your house, right? Oh, I got a clear title house. Oh, way to go. But it's not such a big deal anymore. With rates, I think rates are like 1.64, 1.5. So we find a lot of people that have retired and done the badge of honor thing and paid off their house. Now they find their living expenses hasn't changed as much as they thought. And all they got is clear title house and $50,000 in credit card debt at 24%. So we get a lot of that. And I tell people, don't think yesterday's, when you're paying 12 and 14% for a mortgage, paid off because that's a big hit. But at 1.25%, to leave a mortgage of any size on your house is smarter than borrow money in a credit card to live your lifestyle. So
essentially free money.
Yeah, we get a lot of people who have clear title houses and literally like $30,000, $40,000, $50,000, $80,000 credit card debt. Well, we'll lend that all day because the equity position is there. And of course, the banks won't lend them that money usually because their income streams won't cover the debt. They won't GDS or TDS. So that is a number of people. The other ones are just, I didn't pay my credit card last month, or, maybe I've got a rent to own with an equity position that the bank won't recognize. Builders who just want short-term money, people who are looking for money to get their credit back in shape. All our mortgages are 1-year terms, and after 3 months, they're open payout. So we're not going to hold anybody to the loan.
Very interesting.
We want basically across our company, we want the same integrity across the real estate side. We own a big commercial company as well. We think that integrity's got to run across the whole group of companies. So we don't want to hold you to a debt that if you can get a better rate from the bank, go ahead. We've got lots of people who borrow the money at lower rates, at our rate.
So you're not afraid of turning over, because I guess from your perspective, you're going to charge a lender fee. You're going to make your rates. If they pay you back, there's going to be another deal for you to replace that money with, charge another fee. In some ways, it's a benefit to the borrower because you're literally not tying them down for a year, which, a lot of privates might do that. And for you, it's the benefit because you're turning your money year over year, over and over, even though you're paying investors 10 or 9, whatever you're paying them today, it doesn't matter. You're able to make more fees on that same 17 million. You might be able to put out $34 million in a year with a $17 million book.
You could easily do that, and that's exactly what happens. So we don't want to tie the people up. If I champion people who get their credit back in shape and go to the bank and get it at bank rates. The trouble is, many of those people just don't get it. If they understood money a little bit better, they'd be a lot smarter. And I give advice to some extent. I'm not holier than thou, but we aren't going to hold anybody to a debt. Our returns are increased by a lender fee over a 3-month period relative to an annual return, if you understand money. So we're happy. We're happy for the people. We're happy for us to put the money back on you.
Are you guys seeing a rate compression right now where it's borrowers are paying less, investors are making less in the BC area?
2 things happened. I think we did too. When COVID hit back in March, there was wow, what's going to happen? Like, how is everything else going to react? Actually, I was in Dallas, Texas today, kind of March 13th. I flew down to Dallas to see my son and go on a father-son road trip with the Dallas Stars because my son's a coach. And I went, wow, I shouldn't be here. So I flew back to Canada, and we hunkered down with my directors and said, what's going to happen to the real estate market? Is our equity position going to be eroded? And so we held out about 30% of our portfolio. We kept in GICs at 0.09% or whatever it was, and left it in there for about April, May, June, July, about 4 or 5 months. So we had a lower return for our investors, but in a conservative, and I think at the end of the day, a smart way. A number of mix did that. So come about August, September, there was a lot of cash flowing around with the mix across the province. So there was a bit of a compression in lending rates, but not to a great extent. You might have given a point less, or maybe a half a point on a lender fee, but it's all back going great guns now with, we have little money left over and our rates are back up in that the rate we usually get.
That's fantastic.
Yeah, I mean, COVID. I mean, it's a once in a lifetime, situation, and it's not like you can point back to another point in your life to say, real estate prices were fine, and you can't compare it to anything. So I think, to sit tight for a few months and make sure that everything is okay. Definitely, I would say is a good idea.
A lot of the lenders would call me, like our clients, and say, what are your other clients doing during COVID?
Yeah.
And I would say, like, well, these guys are, they're gunslingers. They're going to keep going. And some of them did really well because when everyone stopped, their cost of funds went straight through the roof, they were charging much higher rates because they were the only players on the street for a few months. A lot of guys sat back, like yourself and a few others. My perspective would be take the safer approach. Because yes, and by the way, in Toronto, for example, we had a V-shaped recovery. We had the prices dropped, and then within a few months they were back up. But for all you know, it could have easily gone the other way. Who knows? And
you have to take the safe approach. That's my view, because this is a safe investment vehicle. This isn't a vehicle where you're trying to get rich overnight, right? It's slow and steady wins the race. So if you slow it down a little bit and then you pick it back up, it's still a slow and steady wins the race. If you try and get there and something goes wrong, all of those returns are wiped out. Like, that's my view.
Well, I have some money in the stock market, I think, like lots of people do. And I think that day, whatever, March was like March 13th or 14th.
Yeah. Doom
like it just, you went, oh no, I lost that money. I didn't do anything wrong. I think every MIC runs different. Ours is a bit conservative. We have a target. We tell our investors, we like to have a return to our investors somewhere between 7 and 9%. And for the fiscal year ending August 31st, we returned just over 7%, but we've been averaging over 8%. So we lost about 1% for our investors. But as a board of directors, we said, do you think people would rather have a zero return or a negative return and a risk? Or do you think they'd rather take that conservative, we thought 6 or 8%, we ended up at 7. So that was a conscious decision by my board of directors. We discussed it quite a bit.
I'd be shocked. I'd be shocked if you got phone calls from your investors saying, what happened to that 1%? Like,
no, everybody loved it. You know what?
Right, of course.
We just did our drips out to our people and advised them about our returns. And we got more comments this year about how happy people were than ever before.
You were talking about how you sometimes give borrowers advice, right? On, money management, maybe, things that that maybe they don't. You deal with investors. I'm sure you've dealt with some extremely wealthy people over the years, some of which may invest with you. What's the best money-related advice that you picked up along the way, where you think about every now and again?
Well, everybody's in a different position. I think the first thing you have to do is understand your position, right? If you're a multi-billionaire, it doesn't really matter. You got money, it doesn't matter. If you're trying to make your way to retirement and have a nice little retirement, then you've got to understand your own position. I think that's the best advice I give to somebody. I mean, we talked about credit, making sure you pay your bills, and well, those are all old stories. But if you understand, like I mentioned earlier, a badge of honor back in my day was pay off your mortgage. That was the deal. You got married, and when you pay off your mortgage, you were the happiest guy in town. So don't get caught up in the old norms. I use this example when I talk to people sometimes as an investor, and I say, okay, when I was whatever I was 30 years old, running a real estate company, and somebody said, gee, if you can get $500,000 in your RSP and you get a 12% return, that's $60,000 a year. That you can live a pretty good lifestyle. That you had your CPP and your OAS, that's great. And if you were lucky enough or somehow managed to take some risk and run your investments up to $1 million, well, 12%, that's $120,000 a year. Now it's a great lifestyle. You can do whatever you want. That was yesterday's information. Today's information says, if you want a secure investment at a bank, I think I just did a GIC for 0.8%. Well, 0.8% return on even $1 million is $8,000. So you can't live a real nice lifestyle at $8,000 a year, right?
Plus everything's a lot more expensive today.
Well, that as well. So I think that's the best advice anybody, as an investor or as a borrower, understand today's metrics, because they're totally different than they were 5 years ago and way, way different than when I was your guys' age, right?
Sure.
So I spent a lot of time, Pete's talking, and if you're going to do that, you want to get a return like 7 or 8% like our MIC is, there's some risk to it. The exempt market products across the board, across Canada now, are all lumped into one big bag, and they say exempt market products. They're risky and you got to be careful. The way we run ours, we don't feel it's as risky as others are. So understand the MIC you're looking at and the philosophy behind it. As an investor and a borrower, just, check around, get some good advice from somebody who's working for you. And the banks aren't necessarily working for you, right?
I think a lot of people put too much emphasis on the front end APR. What is it costing me to borrow this money at closing? And I always kind of start looking at it because I hear a lot of the rumblings in the industry, and there's obviously way more privates and everyone does things a little bit differently. But I started saying to people just in my close conversations, don't look at the front end APR anymore. Look at what it cost you when you discharge that mortgage.
Yeah, there's penalties involved. Sure, that's a big deal. And I think, again, and I'm a fan of mortgage brokers. they should give you that good advice, and I think they will. A bank, you go in, and it's not against banks, but if you go into a bank, they got one product and it's theirs, right?
Right.
Where it has a little more options on it. So if you're a borrower, today's best information is get a myriad of advice based on your metrics. And the old ways are no more. There's a new way out there that you can probably make a better deal and a more informed deal.
Remember when we were at that party a few years back for one of the top banks? I can't remember which one it was, but there were those investment guys there.
Yeah.
And they were kind of like bragging about how they get millions and millions of dollars from people to invest in their products. They make like a less than 1% return for them, and the fees they charge are more than the return. So these people are losing money year after year, and like they didn't have an issue with it because it's a big brand name. People call them, they reach out, hey, I'm calling from this bank or that bank, invest your money with us. They don't care.
Our jaws, I remember my jaw dropped because just talking to them, they were like, even if we lose money, they're still going to pay us fees, and they don't know where else to go. They don't understand. Their families have been dealing with this as generational wealth, millions and millions of dollars. And they're like, as long as we don't really lose the money, like they're happy to keep it with us. And we're making crazy commissions. They're bragging almost about the commissions. It kind of almost resembled, like, do you ever watch The Big Short, Randy?
I read the book, but I didn't see it.
So we watched the movie. There's this like this one scene where they go around and they're talking to these mortgage brokers who are one used to be a bartender, during that whole mortgage hype, and they were bragging about like their commissions on all the crappy deals they put their clients into on those variable mortgages that go up a year later but qualify on the discounted rate. Kind of resembled that attitude. Like these bankers don't care about their consumer or their clients, and it's all about fees and just literally just making money, putting it into their pockets.
Well, here's a good example. I mentioned it earlier. So we have a number of, maybe 10% of our applications are older people with equity in their house that don't qualify for bank rates, which are, like I say, are that 1.5%, 2% right now. But they can borrow money on a credit card till the cows come home. They don't have to qualify. They send them in the mail.
Oh, yeah. So
credit card debt as high as $120,000. And the banks are happy to lend money at 24% without any, and it's the same guy. I mean, it might be a guy in the next office, but certainly, and I'm not dissing anybody. I'm just saying, but as a consumer of debt or consumer of credit, you should understand, right? Banks are happy to charge 24%. You don't even have to qualify. But if you really, if you're the perfect person, they'll lend it to you at 1.5, but only very, very, very few high good covenant people.
That's, Lori, this is the first time someone's brought this up. It's actually really interesting because, the new B21 or B20 guidelines, you cannot borrow money. You've got to go through this whole step to make sure you can service this debt at these rates and this. But then people have $10,000, $15,000, $20,000 credit card limits at 24, 28%. And they don't ask you a question. You have a pulse. Yeah. You have a SIN number. Great. Here's $24,000 that you can go borrow and spend on whatever you want. And we don't even care.
And it's the same guy. It's the same bank. It might be the next door, but it's
just different departments extending different credit.
Exactly. So
we'll give you the money, just not at 1.5, at 25.
Yeah, so at 1.5, we need to make sure you can pay it back in time.
And we'll lend it out at that same debt, probably in that 10, 12% range, which is half the rate they're paying on the credit card. Sure. And it's an equity position. So there's a place for us, but the borrower, the credit, they're responsible for their own guys, right? They can fix it. They can fix it really easy. But if they understand it, maybe they'll fix it. It drove me nuts. It still does to a certain extent. But.
Well, the other issue is, and I remember this back in the day, and I'm pretty sure it's still the same way today, it's a 3% minimum payment on those balances, right? So if you owe $100,000, that's 3 G's a month. You borrow money from Randy, it's $750, $800 a month.
That's right. Yep.
You could literally take, if the cash flow savings, you can pay all that debt off in a few years. So it's a big.
It's interesting. I never thought of that before. That's interesting. Yeah.
Anyway, it's the truth, and it's why these companies like ours are there. We're not out chasing people down to lend them money. We're saying if you got a problem, the banks won't lend it to you at their posted rates or the B20 qualifying rates. We can fix that. And there's enough people in Canada, particularly in BC for us, that need that kind of money short term, and that's why it's growing. I don't know the numbers now, but I know I'm a member of the BC MIC Managers Association in BC, and there's a lot of capital out there in mortgage investment companies now that is
sure.
it's growing quite rapidly.
Hey, Randy, you've been you know, around mix for quite a while now. I know we talked about it earlier. What would you say like the most memorable deal that that you ever did was? Is there one that you kind of think about? Maybe you're on the golf course on a Saturday, you talk about with your buddies, just something that
We've done lots of deals. We did one. This is one I used to lend directly. So this is 4 or 5 years ago. One of my salespeople had a lady who wanted to buy a waterfront condo, and I'm trying to remember the numbers, but I think it was like 215 or 225. And she was getting divorced, and she had $100,000 coming from the separation, and she had $100,000 coming from an inheritance, and they would be there within 3 or 4 months. And she was on a pension, and she went to the bank, and of course the pension didn't cover the debt to borrow the money. So she had $100,000 down, was going to pay it off in 3 months. And so I said, bring somebody from your family in, because I'll talk to you. So she brought her son in. I said, look, you got to go to every bank in town and come back to me when they won't lend you money. So sure enough, about a week later, about 3 days later, she came back and we lent her 50% of value, 2.25 or whatever it was. And so we lent her $110,000. She bought the condo, paid it off, the debt off within 3 months. So it was great for us because the return was fabulous. And within a year, that condo was worth like $380. It was almost doubled in price, right? And her son, every time I see him in town now, he goes, that was just the best deal ever, because mom would have never got that place
without you.
Had nowhere to go. And for us, it was a great deal. And for her, it got her into a position that the banks weren't going to let her get into. I think that's got a million of them, to be honest with you, because everything's different. And over 23 or 24 years, you deal with lots of people in lots of situations.
For sure.
How big is Nanaimo? How many people are?
Nanaimo is about 100,000 trading population.
Okay.
It's 100,000 trading. It's a you know, I moved here from Saskatchewan back in the 60s with my parents, and from Moose Jaw, and I always think, gee, that was the luckiest deal in town, because I didn't have an option. They didn't go, hey, Randy, you want to move to Nanaimo? I just went with mom and dad, and we ended up here. Back in my early days with a company called Block Brothers Realty, I got lots of job offers as a manager to go to Winnipeg and Toronto and Vancouver, and as far as I got was Canberra River, and I was there for 10 years. So the island's been my home for 50 some years. It's, you know, I was talking about it earlier. You know, I'll go golfing this afternoon. It's like 10 degrees and sunny, and you know, there's 350 centimeters of snow on the mountain that's 45 minutes from here. So it's kind of a nice lifestyle. And with COVID, we're finding the real estate market is going crazy because people like the lifestyle of smaller towns now. We have offices in Port Hardy on the real estate side, Port Hardy, Ucluelet. We just opened an office in Powell River, which is actually on the West Coast. We opened there yesterday with realtors. Nanaimo, Ladysmith, and we have a big project in Victoria that we market. So we're all over the island. So it fits really well with we have people in each of those areas. We lend money in those areas as well.
It's funny you mentioned that, because what we've noticed here in Toronto is the prices of cottages in cottage country have skyrocketed in the last, like pretty much since COVID. Yeah. Like there was the scare, obviously, March, April, May, people didn't know what was going on. People were terrified. I was looking at some stuff, and there are bidding wars on cottages up north. I've seen prices go up 25%, literally within 6 months of COVID kind of calming down in the summer. So yeah, people are realizing they're working from home more. There's more remote accessibility. Internet's available pretty much fairly far north these days. And so
Joe, we have no golf here. We have terrible ski hills where we are. Yeah. We have no view at all. We buy real estate. We look at nothing.
Yeah, we look at other people's backyards.
This guy, it's unbelievable. You got everything.
I know. We should be moving to Nanaimo.
But certainly the lifestyle on the island is unmatched anywhere in Canada. We complained on Saturday because our greens were too fast. Literally, we did. We go, geez, I wish they wouldn't cut up so short in the winter. And then we laugh about it because I said, gee, I was talking to a guy in Kamloops even. You know, he's got 2 feet of snow in his front yard, or a foot of snow in his front yard, is 10 below.
Interesting.
We forget that when you're here. It's like going away on holidays, right? You go to wherever, Hawaii or Mexico, or wherever you go for holidays, or you used to, and you're there sitting on the beach drinking Coronas or Tecates or whatever you drink. And you forget that back home, there's bad stuff going on, right? So
Yeah.
And I think that lifestyle on the island particularly is going to become more and more popular. Talking to one of my sales ladies, just an anecdotal story yesterday. She works a lot in Port Hardy, which is near the tip of the island. It's about a 2.5 hour drive from here. And they've got a big development company starting to buy property in that area to try and redevelop, because they see that as the future of where people, great fishing, great, great everything. It's just a little off the beaten track. So
are you a good golfer?
I'm a 20 handicap. So there you go.
Okay. We're all in the same we're all there. We're all there.
Hey, don't put me in the same category. I'm like a 30 handicap.
Well, whatever. You're around. It's a tough game.
I like working, right? So, I don't think I have to work anymore, but I like doing this stuff. I love the Mick. I like the whole part of it. And I like golf, but I don't love it, right? I like skiing better than like golfing, but it's the island lifestyle. It just gives you the ability to do all those things.
It's so funny. You say the island lifestyle, like in my,
like the guy lives in Jamaica.
I think of like Bahamas.
Yeah.
I think but it is the island lifestyle. It's in Canada. Your weather is great where you are. I mean, even dead of winter, it's still, you're saying it's 10 degrees right now and you're golfing. It's a different Canada than I know.
It rains, but you know what? It rains. That's usually when it's raining in the winter here, it's snowing on the mountain. So that's a good thing for us.
Very good. So I'm just going to summarize some things for our listeners here. Again, we're talking with Randy from 460 Mick. They're in BC. They lend across BC. They're looking for residential. They're looking for construction, commercial deals. Basically, if you have a deal in BC, give Randy a call. I mean, it doesn't, no harm. He'll take a look at the deal. Who should they call if they want to send in a deal? I know you deal with brokers, right? So how should the brokers contact you?
Well, the brokers can contact us through you guys and Filogix. That's an easy one. They can send us an email. We're online. If you go to 460, well, the other thing about 460, it's when we decided the company name, it was like there was no other 460 on the internet. So that was kind of made it easy to get a foothold in the internet. Put in 460. I think you get 460. Chevy did a 460 engine back in the 50s, but they don't make those anymore. So I think we're one of the only ones on there, 460. You'll see the group of companies. Find the green square, which is the MIC. Click on there, and the emails through there will get to me, and it'll give you some information as an investor and as a borrower what you might expect. And
for the brokers listening who are going to submit deals, just know you're dealing with a good group here. They're all about the island lifestyle. They're easy to deal with. They don't want it. They want it to be difficult. They're going to fund your deals in a timely manner, and no, that's great. Listen, Randy, we really appreciate your time. Yeah, and for everyone listening, thank you for tuning in. You can follow Mortgage Automator on Facebook, LinkedIn, and Instagram. We're Automator Group on Twitter. You can go to askaprivatelender.com to check out all the latest podcast episodes. Again, it's Randy from 460 Mick. Give him a try. And Randy, listen, we really appreciate your time today.
Yeah, and by the way, we like you guys now, right? I mean, this is a mutual admiration society here, but I know Lori, my administrator, is happy with our move to Mortgage Automator. We were struggling with the new rules came out last year with Filogix and all those things, so we're happy with that. I know it's a moving target, getting everything ready, but we're happy with all the way things have fallen together so far.
We really appreciate the
kind words. Thank you so much, Randy. We appreciate it.
Okay, guys. All right.
All righty.
Nice talking to you.